Hello from Sendero Wealth Management. Well, Halloween is here, which means our marketing department has asked me to do a scary video. And against my better judgment, I agreed. Just kidding, Kayla. But some of you have likely heard the adage, sell in May and go away, which is a product of US stock market returns historically being weakest between May 1st and Halloween. And based on history alone, you can definitely make that argument. But here's the problem with it this year. Every single one of those months, including October, as of recording this video, the S&P has been higher in 2025. And so what's interesting about that is it's not like we haven't had a litany of things to worry about from the stock market's perspective. We're in the throes of the second longest U.S. government shutdown in history. U.S. government has historic and high elevated debt levels. Of course, China and the United States are not exactly playing nice right now, which, they're the two biggest economies of the world, so that's a concern. We have uncertainty around tariffs, and then all of that, coupled with all that, you have elevated stock market valuations at the moment. But the stock market always has something to worry about, like we've talked about before. And as examples, let me list off some things that the stock markets in the U.S. have shrugged off in recent years. Pronounced inflation and concern over Federal Reserve interest rate policy. U.S. stock market valuations, that one's been with us for years. A pending Chinese economic slowdown, election year volatility concerns, and this looming recession that we've been promised for 4 years that has yet to materialize. And so the punchline is, if you wait until you feel great about investing, you will be waiting for a very long time. And while there's no silver bullet, to defend against volatility, there are some things you can do to protect yourself. First, have a diversified portfolio, of course. Even volatile periods have safe ports where you can limit damage and protect capital. Two, staying disciplined. Turbulent markets create opportunities to make an investment mistake. And so staying disciplined helps ensure that your portfolio will benefit when calmer nerves prevail. Third, focusing on your cash needs. It's always a good idea to be intentional and proactive with your upcoming cash needs to avoid being a forced seller at a really bad time. We've mentioned before not to invest with your politics. And maybe this year I'll add, don't invest based on ghosts, goblins, or what month is currently showing on the calendar. And I'll admit, we'll be the first to tell you that there are a lot of things, a lot of risks to be aware of currently. But staying disciplined and sticking with your plan is the best way to keep the monsters at bay. We would welcome the opportunity to discuss what investment concerns are giving you the creeps. Hope you're happy, Caleb. Thank you. Happy Halloween, and take care.